My name's Counselor Tim Rudd, and this is a Finance Committee hearing where we're going to have a presentation from the auditors for the FY17 budget, or fiscal year. I'd like to welcome First District Counselor Carney, 5th District Counselor Joe Driscoll, 2nd District Counselor Chad Ryan, at-large Counselor Steve Thompson, and our auditor, Greg Evans. I guess, Greg, if you want to just pass out what you have, and then introduce your presentation as you like, and then we'll pepper you with questions after.
Okay, sounds great. I'm Greg Evans from the Bonadio Group. We performed the audit of the June 30, 2017 financial statements. With me today is Tanya Budge and Mary Palomino from my team, who were very involved in the audit. You've all received the financial statements and the auditor's reports. What I've passed out is a summary of that, and we'll kind of work through the summary. It's probably just a little bit easier to go through it at a high level than to have you flipping through all the pages, hundreds of pages that we have here. So, that being said, I'm not going to start on page 2 of that summary. I'm going to start on page 4, for planning on my part, but we'll start with the scope of services. So, like I said, we were engaged to do an audit of the financial statements. Along with that, we are required to do an audit of your federal awards, that's known as the single audit, and an audit of your New York State transportation expenditures. So those are the 3 main documents we're going to talk about today. In your packet also is a management letter. We probably won't get to that today, but really that management letter is meant to be sort of our observations and recommendations related to things that can be probably more considered best practices than necessarily findings. So we'll skip that for today. But flipping back to page 2, as I always point out, the financial statements are the financial statements of the city, so all the numbers were pulled together by the Commissioner of Finance and approved by the Commissioner of Finance. While we do put this document together, they are your numbers. Our responsibility is to give an opinion on those numbers. The first bullet paragraph there is we issued an unmodified opinion on those financial statements, meaning that we believe the financial statements are presented fairly in all material respects. So that's the opinion you're looking for. Had we come in and proposed journal entries that management disagreed with and decided not to make, we would have a modified opinion. And we would basically have to pull that out and say, hey, everything's good except for that one particular piece. Had we come in and the records were in such poor shape that we couldn't give an opinion, we would give what we call a disclaimer, and there would be no opinion given.
I don't want to interrupt and get
Sure.
too far ahead. So
that's all right, you got the mic, sorry.
when I first got on the council, they were starting to do PeopleSoft, and
Right.
Your predecessor, the late great David Moynihan, implored that it would be beneficial to your process for PeopleSoft and going forward. Has it been easier to get the information you need because of that? Is there,
Can we just go through his presentation first? Because I know PeopleSoft will come up, and
Okay.
I do want to hear the whole thing first for everybody. Sorry, Chad.
Yeah, absolutely, and we will get to that, so we will talk a little about that. So unmodified opinion, that's the opinion you're looking for. As part of our reports, we also have to review your internal controls over financial reporting and your internal controls over compliance with those federal awards. We do have some findings to talk about that I'll get to in a little bit, but there's 3 levels of findings. Essentially, those that would go in the management letter, which I talked about, which are more best practices. There are what we call significant deficiencies, would be the next level up, not the most serious, but things that you as the governing board should be aware of. And then the highest level of finding would be a material weakness. And we do have some material weaknesses to discuss. And the next bullet kind of addresses one of those, is there were material audit adjustments. So anytime your auditor comes in and proposes material audit adjustments, by definition alone, that's a material weakness. Your auditor then becomes part of your internal control, which optimally, your auditor is completely independent. Your numbers are your numbers. The numbers you see every month or every quarter are exactly what end up in these financial statements. In this case, we did make some significant material journal entries. We'll go over some of those and some of the natures of those, but the result of that is what we call a material weakness. So let's, we'll get to the findings in a minute, but one of the things that I'm just going to point out again, I don't like to spend a lot of time on the numbers because, again, the numbers are yours. I'm the auditor, I'm the scorekeeper, but on page 5, one of the things that we always look at is unassigned fund balance. So just for your reference, I've put together a little chart here showing your unassigned fund balance from 2013 to 2017. Going back to 2013, it was at about 52 million, and currently we're at about 36 million. We look at that typically as a percentage of general fund expenditures. At this point, it's at about 16%, which is still in good shape. To kind of give you a point of reference, the comptroller's office usually recommends 5 to 10%. Any more than that, you know, they might be concerned that, you know, you have too high of a level of fund balance, but we all know that with this deteriorating every year, it's obviously an important thing to keep an eye on. Page 6, again, just so you can kind of see the trends over the years, general fund revenue and expenditures. You can see for basically the last 3 years, revenues and expenditures have been fairly level. So not a lot of changes there.
I'm just on the comptroller recommendation of 5 to 10% of unassigned fund balance. Is that what happens in practice at other cities? Because we're always worried that our fund balance is too small and diminishing, and yet it seems like we're not within the immediate danger zone. I mean, everyone seems to think we're in not strong financial shape. So do municipalities typically far exceed the 5 to 10?
You know, I think it depends on what type of municipality you're talking about too. That, you know, one of the things is the comptroller's office by regulation requires school districts to be at 4%. Which, I mean, if you think about 4%, that's not a lot of savings there for things to go wrong. So, I mean, that's a pretty aggressive amount, you know, low amount to keep in fund balance. I think at this point, you know, and this is again as of June 30, 2017, you're in a decent position. While the trend, to me, the trend is more important than the actual number. And the trend right now is certainly heading down, and that's something to keep an eye on. So I didn't really answer your question. That number is really kind of all over the board, depending on what. Well,
you answered with the trend matters a lot more than the number, so our trend is down, so that's the problem. Right. If we had the same number and it was stable or increasing, it would be less of a concern.
Yeah, let's put it this way, if we came back here year after year and we saw it going up and up and up, and you started headed towards 20%, you know, the obvious thing there is, well, are you overtaxing your citizens? You know, are you holding on to things for future payments that, you know, your current taxpayers aren't benefiting from? So that's kind of the balance there. Pages 7 and 8, just again, some general financial highlights, and we'll go into the actual financial statement in a second, but you have 2 types of financial statements.
Just real quick, before we move on from 6, what caused the massive dip between 13 and 14? I'm sorry, I'm new to the council. I don't know. Mary, you can help me out with this. I believe, hi there, Mary. The spin-up aid, right? It was what?
So that was a one-time revenue.
Oh, okay, so it was propped up and before, so if it was to do 2012 or 11, that would be back down to where it normally is.
Right.
Is the point, so that was just a boost. Gotcha. Okay, sorry.
Yep, no problem. So we have two types of financial statements. We have what we call the government-wide financial statements and the fund financial statements. Without getting horribly technical about that, the government-wide financial statements take into account all of your assets and all of your liabilities. So what does that mean? That means your capital assets and your long-term liabilities. You don't necessarily budget for those on an annual basis, and when we talk about the Gen Fund, those aren't included. So I bring this up because when you look at that particular financial statement on page 17, it shows a deficit of net position of $344 million, which of course is stunning, right? But that's not on an annual basis. So what that includes are all of your estimates for your long-term liabilities. And I think we talked about this last year. That's your other post-employment liabilities, which is your retiree health, and your pension liabilities. Now, this isn't the amount that you're going to pay in the next year. It's the amount that you're going to pay over that employee's entire life. So what happened this year? On those particular financial statements, there was a decrease of $70 million. You didn't lose $70 million. What happened was the accounting requirements required you to bring on more of that retiree health insurance liability. So every year to this point, they've said, all right, you have to take on a piece of this, almost $1 billion, and this is actuarially calculated. Again, for all of your employees, when they retire, what are you gonna pay over their entire life? So to this point, they've allowed the city to take on pieces of it in their financial statements. Coming next year, they're going to require you to take on the entire liability. So at this point, I believe we're going to add another $400 million to that deficit. So what does that really mean? Okay,
When you say require, who's going to require?
That's the Government Accounting Standards Board. So again, we have to audit these statements, in accordance with those standards.
Book, yeah.
Right. So what that means is, essentially, we're going to record an estimate, a big, giant estimate. It's not going to change the amount that you're going to pay on an annual basis. It's not going to change the amount that you're going to budget on an annual basis. But that liability goes in there. And that's why, to some degree, I kind of, I don't put a lot of stock in that particular government-wide financial statement. I hate to bash my own industry, but at some point, the numbers become so large. There are no governments that I'm aware of in the United States that are funding this retiree health. Definitely not in New York State. So let's put it that way. So that being said,
But another way that long-term liability row could increase on page 17 is we didn't bring on new officers the previous year. So when we bring on new staff,
right,
we're bringing on the full value of them being here.
20 plus years.
And then
exactly
whatever the value of their pension is 20 years from now or 25 years from now.
So obviously the actuaries take all that into account. There's actually, I counted them this morning, there's, between the retirement footnote and the OPEB, it's like 20 pages of footnotes describing those calculations. So it's pretty overwhelming if you're not an actuary, which I'm not. Really our role is to take those outside numbers and make sure they're reasonable and that they're using what are industry standards, and we've done that at this point. So, page 8, we're going to talk about the fund financial statements. So each of the major funds that we audit, and that's calculated based again on accounting standards. So we look at the general fund, the capital projects fund, JSCB. The city school district and the neighborhood business development fund are all major funds of the city. All of those have an audit opinion. A couple of those are separately audited. JSCB and the city school district, they issue their own financial statements, but we pull them in and we make sure that we agree with the numbers that are in there. So I'm going to skip down to the third bullet. The third bullet is, we're going to talk about this, the gen fund. So this is what you guys budget for on an annual basis. This is what you're going through your budget hearings for in a lot of cases. The general fund had a decrease in fund balance of 2.4 million for the year. So the initial budget for that was approximately 12 million. You came in at 2.4 million. So kind of a big pickup there. Not nearly as bad as anticipated. And I just point out too that the city school district had an increase of 7.4 million, and they expected to have a decrease of about 15 million. So again, pretty big swings there. In most cases on the expense side, not necessarily the revenue side. So both the city and the school district were able to control expenses and keep that budget deficit down. So that's kind of the big picture on the financial statements. I'll get into the audit findings themselves now if we don't have any questions on that. And then when I'm done with that, I'll just point out a couple of things in the big document so that you guys have that for your reference. So on page 9, the audit findings, finding number 1 is a recurring finding that I alluded to earlier. This is the finding relative to the journal entries. So again, if your auditor is involved in those journal entries, it becomes a material weakness. And there were material journal entries in the general fund, the capital projects fund, the aviation fund, and the sewer and water funds. In your document that is labeled reports on required reports under uniform guidance, there's more detail as to those findings. You'll see the actual numbers in there that each fund was adjusted by.
Where was that again? Sorry.
That's you should have a separate document there called reports required by uniform guidance and government auditing standards. So that's where you'll see the full listing of the findings.
Okay. The smaller ones, yeah.
Yep. So finding 2 is related to grants management. Again, this is a recurring finding. Basically, what we're recommending here is that the city centralize oversight over grants management. One of the key factors that we had here was we noted that and this is going to be repeated in the New York State Department of Transportation audit report, is the city requested reimbursement from the state for the same 3 pieces of equipment twice. So basically revenue was overstated by $435,000. So what we're proposing here is that, a higher level oversight of, in that case it's a reimbursable grant. So we're looking at, someone taking the expenses of the grant and the revenues of the grant. If you're looking at those at a high level, obviously they should balance. You're only going to get reimbursed for what you actually spent. So clearly an error, but one that could have been caught with better oversight. Finding number 3 is related to capital assets. So again, capital assets show up on that government-wide financial statement that we've talked about. And basically, we've had to make a lot of adjustments there too. One of the key findings we have here is related to the aviation fund. The airport authority still tracks those assets that show up in the aviation fund. At this point, there's no agreement between the city and the airport to do that. So we recommend that you formalize that agreement so that either the authority is kind of obligated to do that, or you bring that accounting back in-house.
Is that reimbursed to the city? Is that the one I'm thinking of? Is that the one I'm thinking of where they pay us for reimburse our services?
That's in the aviation fund. They do any costs that we incur on behalf of.
To do their stuff?
This is actually, the other way. They're providing a service for you that I don't believe you're reimbursing them for at this point, so.
Well, we gave them an airport.
Well, you did give them, you know, you gave them a great deal, but,
So it should be codified is what you're saying?
yeah, definitely. I mean, it is important, and we just want to make sure that that doesn't, you know, if for whatever reason there's turnover at the airport authority, and then nobody's accounting for those assets, so. So those three were recurring findings related to financial reporting. The fourth finding here is related to neighborhood business development, the HOME program. This is related to federal awards. This is one of the lower levels of finding that I described earlier, a significant deficiency in internal controls. Really, with regard to your federal awards, we're required to do two things. We're required to check your compliance with federal requirements, and then your internal controls over compliance. Meaning, do you have the controls in place to ensure that you're in compliance? What we found here was that the city is required to do on-site inspections to determine compliance. And there were two properties that weren't on the list that were essentially the list of those properties. So what we're saying is, hey, you need to shore up your controls to make sure that everything is on that list to ensure that all of your properties are in compliance there. There wasn't a compliance issue, it was internal control over compliance. Sure.
In reference to that, is that city-owned properties or just simply the based on our laws and ordinances, what we're supposed to be inspecting and reviewing, we weren't?
Those are properties that were recipients of federal funds.
Okay.
So the city's required to follow up on those, essentially.
Not to belabor a sore subject, but you know, the audits while we were administering lead funds, you know, did we find, and I don't know if it's before your time or if you know about it, did we find significant or material weaknesses in those reporting? And if so, were they presented, and if not, or did we find that we were, you know, doing it correctly and